analysis to Boeing. It's interesting actually. Boeing actually has a similar sort of price action to Facebook. Um, but as you know, I took some bad losses on Boeing, and a lot of it had to do with emotions and not really so much bad analysis. Actually, that led to bad analysis, but really um, bad emotions. Um, Not bad emotions, just emotions. And I think that the key here is um, you should try not to trade with expectations and try to focus on trading what you see on the chart. Um, so some of the things I notice, which I'm going to correct, and I should have picked this up, was my analysis of the um, open. And I think a lot of it really had to do with the fact that I exited Facebook. Um, so we have, you could almost say, three pushes up here. So you're expecting a sell off or at least a retracement. But what you actually have is, first of all, this was very difficult to read. So I think the 1 hour time frame is the best way to, and of course, yeah, there we go. So 1, 2, and 3 are open. So I didn't need to look at the pre-market data, but I did anyway. Um, but the first thing I should have noticed, and I didn't, again, when you're trading and you're not focused, these things happen. Now I look at it and I have a bit more knowledge and understanding, especially as you have this bear breakout. This bear breakout sometimes gives you the impression that lower prices are expected. I was expecting price to drop here. And that's the first issue. The expectations should not have expectations. We had a bear breakout here, but then we also had a bull breakout of this range. So chances are we're now going up. So if we draw a channel down from here, drawing these lows, these highs, you get something like this. So you have here, first low, pullback, double top. So you use this as your first point. Your next point is here. So you have 1 point, 2 points, 3 points. You could also draw here, where you notice that you have a bull breakout here, and then you now have a bear breakout again. So this line adjusts here. And what I mean by that is, say for instance now nothing has printed, all you have is just this double top, and say this point. So your next bet at this point is you would draw your trend line like this, and this would be your trend channel. The moment you have this bull breakout from this double bottom, there is the assumption, therefore, you're now in a bull trend. But you can always redraw your trend channel as we have just now here. And as you can see, we broke down here, bear breakout, we broke that bull trend, so bear breakout here, sideways. So we have another trend resumption here, pull back. So there's a new trend from this point down to this point. Join these lows, just like that. So retracement, breakout, retracement, and breakout. And this is a 3 leg pattern. This is a wedge. And I'd never ever looked at this when I was trading it. I should have looked at this analysis before I looked at this. So we now have a wedge, and now we have a bull breakout here. So this line this is what we're breaking out of there. So this channel, as you can see, there are lots of lines, but you have to use these lines to follow the price to see what the computers are using. So you have a bull breakout sideways, right? So it's the first push up, sideways, bull breakout here, and this, you just have a point here, sideways. So this is the second push up, bull breakout. Now, this is where things get a bit tricky. I had an expectation. the expectation was because of all this selling, we're going to get more selling down. We're definitely going to get a second leg down, and this was the second leg. The problem was when I saw this, and I noticed it did not take this low out, this should have alerted me already that this now is the new range. So you would then now take this low, join this low, and connect it to this high. Now, how do I know this is the new range? Because if you look at the bull breakout, whilst we have this wedge, the first sell is usually minor, which is what I thought, but at least we have this. I will then now look for a signal bar to enter short. Okay, so let's look at that. So say for instance now I wasn't sure what was going to happen and I expected a wedge bottom to happen here. Double top. We actually do not get a signal bar. We actually get a bull bar. At this point, for me, the market isn't long. There isn't any pullbacks here. The last pullback was this, and it was a bull bar. This is a bull breakout. Bull breakout. Sorry, this is a bull breakout. This tells you you're expecting higher prices, and this is the direction. You could have bought this bar if you wanted, but then you will be looking to exit somewhere here if this is a wedge, because you could get a double top. But instead, what you have is a bull breakout. This is a good buy. You can put your stop here if you wanted, or you could put your stop here, or here, or here, any of these bars. This is probably the most appropriate stop, but because this is a breakout, you're not expecting price to come back and take this bar out. Notice how when the bulls got to this side of the bar, they took profits here. But the follow through wasn't great because you have wicks at the bottom, a bull breakout, another bull breakout. This whole thing's a bull breakout, double top. So now you're expecting a short. But again, you do not get a signal bar short yet. Bull breakout, breaks out this level. So now you adjust your trading range, and now you have two highs, 1, 2, and a low. So this is the range. We are not going down. Double top here, bear breakout. We're expecting the bears to try and test this level, but instead what actually happens is the bulls buy this, and they usually buy these breakouts in a very strong bull trend. It's still very tight channel. And then, in fact, let's extend this. And look at that. So bulls are still using this channel, but they're also using this channel too. And then we now go sideways. We have this bear breakout, double top, bear breakout with this channel. Right? So we still have this channel. We test it again, bulls buy on this channel, bears break it, come back up, and because it's not a convincing break, bulls take this out. They think that the bull trend's still carrying on, so bull break out, and they make a new high, but not enough because the bears break this level again. There's always an attempt, every time there's a break like this, there's always an attempt of trying to carry on the bull trend, especially when you notice there's a doji here. It's different if you had a bear bar closing on its low, another one, and follow through. But the follow through isn't great, so therefore there's an attempt to try and start the bull trend again. Instead, the bears tick. This is now a low 2. This was a low 1. Oh, no. This was a low 1 signal bar. I have to go over these again. But anyway, there's a high probability sell here. As a result, we get 2 legs down. And this is as far as the bears go. Bulls buy this sell off. And now we're in a trading range. So this channel has now changed from there to there to here. Bulls can't take the market high enough, so this channel has changed one more time, here to here, to this base. So you have two highs and a low. Bears target the base of the channel, two legs down. Bulls now buy this. They can't get any higher, so what do they do? Oh, actually, that's probably not the high, sorry. One, pull back, two, pull back, three, and then they push it down, and now we have a triangle. Bull breakout, and then now we're in this thing. But the point I'm trying to make here is that um, you really, really, really need to focus when you're trading these. Otherwise, you will make mistakes and start trading wrongly. Again, having expectations, never ever a good idea. And I think from now on, what I'm going to attempt to do is trade these things again without any expectations. So I'll give you another example. Here we have a, I'm just going to plot this to this from now. So price open the next day. Now we have a fair leg, we have a wedge, 1, 2, 3. Is it right? So our price opened here, pulls back here. Would you short this? I wouldn't, because you are. Where are you? You're at the. Where are you exactly? You aren't at the bottom, top of the range. Okay, so this is 1, 2, 3. Right, would you short this here? This is the middle of the range. Risk is too high because your stop needs to be about here. Most bears will not take this. They've come all this way, and we've pushed price. We've broken out already. This is a double bottom. Bulls will buy this here because they are going to be buying sell-offs. As a result, we push up, 3 pushes up to this sell zone. 3 pushes up, bad follow through. Bears would short this, bulls would take profits because of 3 pushes up, and also it is a bigger wedge. 3 pushes up from this high. 1, 2, 3. So chances are we are going lower. First reversal, because of this is a tight channel. First reversal is usually minor. Pullback. Second reversal, not a really good signal bar. This is a better signal bar, but what's it called? Risk too high. But then you have a reversal here. So therefore not much happening here. Triangle formed. You have a triangle. So you have down, pull back. There we go. So it's not exactly an inside bar. This is an inside bar. So it's an outside, inside, outside bar. Triangle, breakout. So bear breakout. Now we're definitely in a bear trend because we have taken out this low and the bull trend is over. Well, the bull trend ended after this level, and this is why we have this bear breakout. So you would then now mark this level. This is the last low, broken out, so we now have a new low. And when we get here, this is where you now draw your new trend line. So this low to this low to this high. Of course, we already talked about what's happening here, but these levels essentially are the levels you're looking at. So now you have this. This is the next high, creating a gap. This gap tells you how strong this is going to be, especially because the bulls aren't able to push price to this point. Essentially what this means is all the bulls who bought here and bought here cannot make money and therefore have a negative gap here, and therefore they are most likely to sell when this breakout happens, and this is causing more selling at this point. Lots of stops hit. Right, and that's how these channels work. But anyway, point is, when price came in here, I did not consider that. I wasn't thinking. I just had a bias to sell because of how much selling was here. I just did not think that. This was first leg pullback, second leg. I wasn't thinking of it in that sense. All right. Yeah, using this analysis, you can do the same thing. Just quickly looking at this, big down, it's a bear breakout, so big down, big up, and leads to big confusion. So you have a situation where you have 1, 2, 3. This is a parabolic wedge, and it actually has gone parabolic to join all these 3 lows. So you get here, the price has turned parabolic, and as a result of that, actually no, what am I doing? The wedge actually happened here. Okay, I'm not sure what's happened here. I just realized that. Doesn't matter. Parabolic wedge. You are in the buy zone. You are testing this low here because traders bought from this level the last time and they caused this rally. So file, price selling off here to this level, doji, high 1, buy signal bar, not very good, but traders bought, lots of selling still, second buy, testing this high, so now you have a range. Double bottom, but this level, now you have 2 levels on this level, so this level you can use as your channel level. Okay, and so now what happens is, because you have this big down, big up, chances are we are going to go into a trading range, not choosing any real direction. You have a triangle here, and a wedge, 1, 2, 3, 3 pushes down. Actually, no, that wasn't 3 pushes down. Then we have, yeah, it starts here. Down, pull back, down, pull back, down. 1 push, pull back, 2 push, 2. So yeah, anyway, this is a double bottom, and this is a very good signal bar. So therefore, lots of traders will buy this bar. It's actually a high 2 as well. So this is a high 1, this is a high 2. So most traders will take this, pull back, and aim for the top here. So high 2 will definitely close this up. Traders are trapped, so therefore they're buying this. This is another wedge. 1, 2, 3. Not a very good signal bar. Traders will buy the break of the signal bar, go higher, and this is a high 1, high 2, higher probability buy if it's a high 2. So traders will buy this bar, which is why we have a breakout here of this triangle heading up, pause, second leg, third leg, but a double top, and testing the top of this channel, which we just marked here, double top, heading back to test the bottom here, and as you can see, tested the bottom, and now we should get a bull breakout. Did not get to the top here, testing another high from the past, and we have this pushing all the way down, and then we form that wedge. Hopefully this helps you understand the best way to trade these things. You have to look at every single bar as each bar is forming, and looking at it in reference to the channels, the levels, and the prices. Why is that? Because that's what the other traders and computers are doing. A lot of them are making decisions based around what each bar and each situation they're in. They have parameters that they're all following and rules that they all abide by. As long as you do the same thing, your trade should work out well. When I was trading yesterday, I wasn't focused on the price action. I was focused on my emotions and making decisions based on my emotions, and as a result, making bad trades. All right, thought I'd just share that one too.